Cold open. Bitcoin is nearing $80,000 after posting the largest weekly gain in its history. The US is planning a 7.5% overcapacity tariff on Chinese goods ahead of the September 24th summit between President Xi and President Trump. Canada trade talks have collapsed, sending steel stocks higher. Microsoft has rallied 66% and now trades near fair value. Moderna has cratered 39% year-to-date before a 7% single-day profit take. And across the entire market, a technical scan of more than 10,000 symbols is lighting up red, 35 bearish signals against just 15 bullish. But somewhere between the AI mania, trade tensions, and $1 billion run bear and bet, you have a market that is trying to figure out where the next wave of opportunity is hiding on this Monday, August 24th. 2026. Good afternoon. Transition the crypto rally that won't quit. Let's start with what has been the most explosive story this week, Bitcoin's historic surge. Yahoo Finance reported that Bitcoin has soared toward $80,000 after posting its largest weekly gain ever recorded. This is not a drill. For the first time in the asset's decade-long history, Bitcoin has put up a weekly performance that analysts are calling historic. The rally did not stop at BTC-USD. Ethereum, ETH-USD, and even Zcash, SEC-USD, saw strong gains alongside the leading cryptocurrency. The volume data tells the story clearly. Bitcoin-linked ETF IBIT traded nearly 119 million shares, up over 6% on the day at $43.68. BITO had over 113 million shares at $10.41, also up over 6%. Bitcoin miner Mara pulled in over 104 million shares, the market's volume bellwether for crypto names. This is not niche speculation anymore. This is mainstream capital pouring into crypto at a scale the market has rarely seen. The technical scan's volume leaders were dominated by crypto names. IBIT and BITO sat at 6th and 7th place in total volume behind HOWL, KNRX, TSLL, GOS, and LGCL, all of which traded well over 100 million shares. Mara rounded out the top 10. And on the gainers' side, XRP-linked instruments UXIP, XRPT, and XXRP were among the day's top performers with 22 to 23% moves. What does this tell us? The macro narrative is shifting. When Bitcoin posts its biggest weekly gain on record, when ETFs are pulling 100+ million shares, when multiple cryptocurrencies rally in tandem, the market is signaling something about how investors view risk, liquidity, and the broader financial system. Transition trade tensions and the macro backdrop. Now to the geopolitical and trade story, which is setting the macro tone for the week. Investors Business Daily led with what could be a significant policy shift. The US is planning a 7.5% overcapacity tariff on Chinese goods, with the timing targeted ahead of the September 24th Xi-Trump summit. This is not a minor bump in the road, it is a structural reshaping of trade relations. And when tariffs loom, certain sectors always respond first. Canadian steel stocks got a direct shot of adrenaline as trade talks collapsed. Investors Business Daily reported that Nucor, Steel Dynamics, and other domestic steel names rallied on the prospect of reduced Canadian imports acting as a de facto substitution play. The ticker cluster included NUE, STLD, AH, CLF, and CENX, the entire domestic steel complex moving higher on the same macro thesis. On the European side, European equities closed mostly lower in Monday trading. MT Newswires flagged that U.S. Treasury Secretary Scott Bessent was expected to provide details on Iran sanctions, adding another layer of geopolitical uncertainty to an already complex week. And then there is the S&P 500 itself. Oppenheimer reported that both annual earnings and revenue growth for the S&P 500 are slowing from last week's pace. With heavy NVIDIA mentions in their analysis, it becomes clear, as NVIDIA anchors the index at this level, its momentum is simultaneously driving earnings growth and masking the broader softness. When the largest component slows, the whole index feels it. Transition AI dominates Microsoft, Nvidia, Apple, and the infrastructure boom. If Bitcoin is the explosive surprise and tariffs are the looming macro risk, AI is the story that keeps the market awake at night. Let's walk through the most consequential AI-driven headlines. Microsoft, MSFD, has been on a 66% run. The stock now trades near fair value, according to Simply Wall Street. Trefis published a deep dive saying the upside still runs through Microsoft's data center build, and the ticker cluster was massive. MSFD, GSBC, Goog, Amazon, CRM, Apple, Oracle, and Oracle BD. The consensus message is clear: if data center spending accelerates, Microsoft still has upside. But the 66% run means those expectations are baked in. Nvidia ecosystem continues to expand. Lancium announced a partnership with Nvidia to advance gigawatt-scale AI factory development across a 15-plus gigawatt portfolio. This is infrastructure at a scale that was unimaginable 2 years ago. Celestica, CLS, was cited by UBS as poised for accelerated AI-driven growth heading into 2027, with Google, Goog, and CLS in the cluster. Nvidia also appeared in stories about Eli Lilly and the broader biotech AI overlap, and Oppenheimer's S&P 500 earnings report flagged NVDA specifically as driving the earnings trend. Then there is Apple. 24/7 Wall Street reported that Apple has become Wall Street's favorite Mag 7 stock for a surprising reason. MSFT, Apple, Avgo, and Goog were all flagged in the cluster. After a 66% run across the megacap tech names, the question is whether there is still room to run, or whether these names have simply become too expensive for comfort. Akamai, ACAM, got attention for strength in its cloud infrastructure segment, with Oracle tickers Oracle and Oracle BD in the mix. The question, as always, is sustainability. Will that cloud infrastructure strength persist, or is it a temporary peak? Transition biopharmaceuticals, profit-taking and long-term stories. Biopharma had a very mixed day, and the profit-taking on Moderna was particularly sharp. Moderna, mRNA, sank 7% in a single session after a staggering 392% year-to-date surge. That kind of run always attracts profit-takers, and today was no exception. BioNTech, BNTX, dropped 4%, and Merck, MRK, slipped alongside it. The biotech ETF, IB, was highlighted in the coverage, suggesting the broader biotech complex felt the pressure. On the flip side, Eli Lilly, Eli, was painted as having a $100 billion revenue story in the making with 18% upside. NVDA, NVO, and MRK were in the cluster, connecting the AI pharma thesis back to the semiconductor play. Merck, MRK, also appeared in a separate piece on whether a smaller biotech, Sire, is a buy now as clinical catalysts clash with valuation risk, with J&J and AB flagged in the mix. Spire was mentioned for its SPY 772 HS study potentially broadening growth beyond core IBD treatment areas. HMO stocks got a steady read. Sachs published a piece on 5 HMO names, Hum, Psy, CNC, and Mo, citing steady premium flow and increased digitization as the twin drivers. This is the kind of defensive, low-volatility healthcare play that attracts capital when the broader market gets shaky. Transition consumer, retail, and discretionary. The consumer complex was a battlefield of conflicting signals this week. Walmart, WMT, cratered nearly 10% in a week. Yet the street reported that a retail CEO remains optimistic for the holidays, flagging NVDA, TGT, HT, and LOW as the broader retail ecosystem to watch. The disconnect between short-term price action and long-term sentiment is telling. Costco, got flagged for AI search growth that could become a meaningful sales catalyst. DG and TGT were in the coverage, suggesting AI-driven retail efficiency is moving from narrative to P&L. Starbucks, SBucks, is up 27% year-to-date, and Zacks asked the classic question, buy, sell, or hold. MCD, Bros, and FWRG are in the cluster, indicating the broader fast casual and specialty coffee complex is being compared alongside SBUCs. Coca-Cola Co. had multiple headline stories. An insider sold roughly $10.1 million in shares according to an MT Newswire's report. Sachs raised the concern that consumer health trend shifts could be a threat to the core beverage business. But Motley Fool ran a piece saying KO's dividend streak rivals PepsiCo's and that nobody is talking about it, a classic contrarian pitch. KMB and PEP were in the Motley Fool cluster. Royal Caribbean, RCL, dropped 20% from its 52-week high, with Nvidia also in the cluster. Motley Fool asked whether the dip is viable, linking cruise recovery to the broader consumer spend thesis. Netflix, NFLX, was highlighted by Simply Wall Street as trading at a discount despite strong cash flow, making it one of the higher-quality entertainment names the analysts are watching. Transition corporate deals, regulatory news, and miscellaneous. Several notable corporate and regulatory stories rounded out the picture. Nvent Electric, NVT, struck a $1.75 billion deal to buy Maverick Power. Amazon and NVT were in the coverage, suggesting the deal is being viewed through the lens of data center and cloud infrastructure demand. Equifax, EFTS, agreed to a $100 million settlement over credit score errors. A straightforward corporate resolution, but at a $100 million tab. It is a reminder that even credit bureaus face meaningful regulatory risk. Uber was fined €825 million by Dutch regulators for automated driver dismissals. Meta was in the cluster, likely reflecting comparisons between platform economy regulatory risks across the sector. Billionaire Ron Barron took a massive $24.9 billion bet on a controversial giant flagged as Tesla and SBCX. Whether this is Tesla or a broader SpaceX adjacent play, the size of the position is impossible to ignore. Akamai's cloud infrastructure strength was flagged again with the question, will it last? Oracle-related tickers Oracle and Oracle BD were in the mix, tying it back to the broader cloud build-out thesis. A smaller energy play was highlighted saying a stock can outshine ExxonMobil, with XOM, CL equals F, and PAR in the cluster. And on the more mundane side, a variable rate fix involving MQG.AX and C was noted. OneView Commerce was awarded a POS system contract by Post Office Limited, ACN in the cluster. iDrive Inc. had a press release that was marked for disregard, and the U.S. Air Force selected LGNDX for Phase Roman III deployment of its defense acquisition platform. Transition market movers and technical signals. Now let's check the tape for your quick mover rundown and the technical picture. On the gainers side, Ardaku led with a 53% move to $9.95 on just under 6,000 shares. CRMU surged 47% to $2.38 on 819,697 shares. UK gained 28% to $5.40 on about 1 million shares. Hadu rose 27% to $13.17, and Hooks climbed 27% to $35.98. On the XRP-linked names, XXRP jumped 23% to $33.17 on 1.5 million shares, and XRPT climbed 22.5% to $35.22 on 1.25 million shares. On the losers, whose crashed 27% to $8.74 on 1.3 million shares. RGTZ fell 23% to $2.78 across 8.4 million shares, the most volume on any decliner. QBTZ dropped 17% to $2.92 on 4.6 million shares. SIFC came off 16% to $4.01 on 3.6 million shares. And IONS, the most heavily traded decliner by far, shed 16% to $2.41 on a staggering 16.4 million shares. The volume book told a wilder story. HAL had nearly 297 million shares under $1 at 87 cents. KNRX had 144 million at 52 cents. TSLL had 135 million at $9.77, up over 10%. GOS had 131 million at 15 cents. LGCL had 123 million at just 6 cents. IBIT had 119 million Bitcoin ETF shares at $43.68. BITO had 113 million at $10.41. Mara had 104 million at $11.26. And NVDA had roughly 99 million at $214.72, the same level that anchors every major index conversation. The technical signal scan across 10,786 symbols produced 9,607 signals. 15 bullish, 35 bearish. A more than 2-to-1 ratio leaning hard toward caution. The top bullish reads flagged strong momentum on PFSA, TPC, RFI, RFAU, and IPST. But the bearish side was crowded. NWOW and BTOG were flagged for potential overextension, RFAU for both momentum and overextension, and XCH and Nexer in overbought territory. Once again, the names with the strongest momentum are also the same names most at risk for a sharp pullback. Transition dividend stories and closing thoughts. If you prefer income over momentum, there were plenty of options. Coca-Cola's dividend story ran on multiple fronts, Motley Fool calling KO the best dividend stock, an insider sale complicating the picture, and a health trend shift risk that could undermine the business even as the dividend remains bulletproof. Consumer staples giants with dividend streaks rivaling PepsiCo's are not getting the attention they deserve. Realty income-style properties continue to attract capital in a market that increasingly sees growth as a luxury. And on the ETF side, broad exposure vehicles linking to NVDA as a core holding are still the primary way institutions are positioning for whatever comes next. So here is the takeaway for this Monday, August 24th, 2026. Bitcoin posted its biggest weekly gain in history and is nearing $80,000. The US is planning a sweeping 7.5% China tariff ahead of a major summit. AI dominates the conversation at every level: Microsoft's data center build, NVIDIA gigawatt-scale factory partnerships, Celestica's 2027 growth forecast, Apple becoming Wall Street's favorite Mag 7. But the technical signals are flashing red, 35 bearish versus 15 bullish. Moderna sank 7% after a 392% run. Walmart cratered 10% in a week. And at the top of the volume book, the same names: Howl, KNRX, TSLL, IBIT, BITO, Mara, and VDA, that keep defining this market are the ones generating the most volume by an enormous margin. It is a market that is deeply divided between euphoria and caution. Thanks for listening. I will see you tomorrow. Until then, stay informed. Sign off. This has been your market news briefing for Monday, August 24th, 2026.